The world economy is a ship sailing on choppy waters. Storm clouds gather on the horizon. The air is thick with uncertainty. Many experts believe another Great Depression is coming. Are you prepared? This isn't about fear-mongering. It's about facing reality. It's about taking control of your financial future. Just as a sailor prepares for a storm, you must prepare for economic hardship. This essay will be your guide. We'll examine the current economic landscape. We'll explore potential scenarios for the coming years. Most importantly, we'll equip you with practical steps to protect yourself and your loved ones. Remember, knowledge is power. The more you understand, the better prepared you'll be. Now let's delve into the eye of the storm. To chart our course, we must first understand our present position. The US economy is sending mixed signals. On the surface, things might appear stable. GDP growth, while slowing, is still positive. Unemployment remains relatively low. However, a closer look reveals cracks in the facade. Inflation, though off its peak, continues to erode purchasing power. Consumer debt is alarmingly high. The stock market, often a barometer of economic health, is volatile and unpredictable. Don't be fooled by the rosy headlines. These are superficial indicators. The underlying fundamentals are weak. The economy is living on borrowed time. The party cannot last forever. Predicting the future is a fool's errand. However, by studying current trends and forecasts, we can prepare for different scenarios. Deloitte, a leading consulting firm, outlines 3 potential paths for the US economy. The baseline scenario predicts continued, albeit sluggish, growth. The optimistic scenario envisions tax cuts and deregulation spurring economic expansion. The pessimistic scenario, however, paints a grim picture of accelerating inflation, a shrinking population, and a deep recession. Which path will we take? Only time will tell, but one thing is certain: uncertainty is the new normal. Hope for the best, but prepare for the worst. While economists debate the timing and severity of the next recession, several indicators suggest it's closer than we think. The yield curve, a historically reliable predictor, has been flashing red for months. Private sector debt, while currently manageable, is steadily rising. Economic momentum, once robust, is waning. Consumer confidence is shaky. Businesses are hesitant to invest. These warning signs should not be ignored. They are the proverbial canaries in the coal mine. Don't wait for the official declaration of a recession to take action. By then it will be too late. The time to prepare is now. Section 5. The Trump effect, policy shifts and their ripples. The Trump administration's policies have significantly impacted the economic landscape. The trade war with China, while potentially beneficial in the long run, has injected uncertainty into the global markets. Tariffs, like taxes, ultimately burden consumers and businesses. Spending cuts, while touted as a means to reduce the deficit, risk exacerbating economic inequality and slowing growth. The impact of these policies is still unfolding. However, one thing is clear: navigating the economic waters just got more treacherous. Section 6. Weathering the storm, strategies for financial resilience. So, how do you protect yourself from the coming economic storm? The answer lies in building financial resilience. This means living below your means, reducing debt and creating multiple streams of income. Start by tracking your expenses and identifying areas where you can cut back. Create a budget and stick to it. Avoid unnecessary debt, especially high-interest credit card debt. Explore ways to boost your income, such as a side hustle or investing in income-generating assets. Remember, financial resilience is not about deprivation. It's about making conscious choices that align with your values and long-term goals. Section 7. Safeguarding your wealth, prudent investment in turbulent times. In times of economic uncertainty, protecting your capital is paramount. This doesn't mean stuffing your money under the mattress. It means investing wisely and diversifying your portfolio. Traditional safe havens, like gold and silver, can provide a hedge against inflation. Real estate, though cyclical, remains a tangible asset with intrinsic value. Consider investing in assets that thrive during economic downturns, such as defensive stocks or alternative investments. Avoid speculative investments and get-rich-quick schemes. Remember, the goal is to preserve your wealth, not gamble it away. Section 8. Expert opinions, insights from the trenches. Financial experts are sounding the alarm, urging individuals to prepare for choppy waters ahead. Paul Stanley of Granite Bay Wealth Management advises investors to remain cautious and focus on preserving capital. Larry Tentarelli of Blue Chip Daily Trend Report suggests sticking with proven investment themes that have weathered previous storms. These experts agree the time for complacency is over. Heed their warnings and take action to protect your financial future. Section 9. Conclusion. Preparedness is key. The world is on the brink of a new economic era. The old rules no longer apply. The future belongs to those who are prepared. Don't be caught off guard. Take control of your finances today. Reduce your debt. Build an emergency fund. Diversify your investments. Create multiple streams of income. Educate yourself about economics and finance. The more prepared you are, the better you'll weather the storm. Remember, this is not about fear. It's about empowerment. It's about taking responsibility for your financial well-being. The time for action is now.